The final two single candlestick formations we are going to look at are called inverted hammers and hanging man patterns. Again, these are reversal patterns found in bullish and bearish trends, but with different underlying price action and therefore different changes in participant psychology going on.
Are inverted hammers similar to hammers?
Well, they are similar insofar that inverted hammers are a bullish reversal pattern. That means they form in downtrends and might indicate a change of direction. They also both have small bodies with one long wick. The big difference is the body forms at the bottom instead of the top, and an inverted hammer has a long upper wick. This means the period has opened, reversed against the trend, gone higher, but been pushed back to the near the open.
Does the colour of the body matter much here?
Again, only marginally. A green body creates a slightly more bullish indication of reversal. And what do you remember about hanging man patterns?
Well, they're the opposite of an inverted hammer, aren't they?
Yes, that's pretty much correct. If we get our mirror out again and put it to the inverted hammer, we get a hanging man. This pattern is the same shape as a hammer, but it forms in a bullish, uptrending market and is an indication of a bearish reversal.
Okay, and I presume the colour is marginal, with the red body being slightly more bearish.
Yes, correct. Again, the color of the body is not that important. Okay, let's look closer at what these patterns tell us about the market. An inverted hammer occurs when the trend is downward, during which time the bulls have countered but been pushed back by the bears, leaving the close near the open.
Okay, and what might we conclude from this?
All this suggests the bearish general trend is vulnerable. It was challenged by the bulls, but the strength of the bears was strong enough to push back. That raises a flag to traders that the sentiment in the trend might be waning. Typically, it's the next period in the pattern that reveals the insight we are looking for. Here, we can start to look for confirmation of the power of the bulls.
And how would we do that? What would we be looking for?
Well, a few things. If it gaps up, if the next period opens and closes above the body of the inverted hammer, or if it's a solid bullish candle, all suggests the trend might be reversing.
Got it. And what about a hanging man pattern?
With a hanging man pattern, the inverse is true again. The bears have countered against the prevailing trend and the bulls have pushed back. Let's look for these on a chart. We can see an inverted hammer form here.
Yes, it's in a downtrend. Long upper wick, small body.
Quite right, but this reversal fizzled out. The point I want to make here is, although we can retrospectively find examples of reversals coming after a candlestick pattern, it doesn't happen every time. What it does is increase the probability of a reversal just a little, and we need other techniques to confirm. In this instance, I can't see any horizontal support or resistance which might have helped us confirm the reversal. We can actually see another inverted hammer a few days later that eventually led to a sustained reversal.
And the hanging man pattern?
I can't see any on this chart. If I bring up a daily chart of the same pair, I can see a classic hanging man here at the top of this uptrend. This follows a long-legged doji. The market gapped up at the open, was pushed a long way down by the bears and the bulls resisted, running out of steam, which resulted in the reversal.